I used to think the stock market was just for rich people in suits. I had no finance degree, no broker, and barely $100 to my name. But I still made my first $1,000 investing, and honestly, I wish I started sooner. In this video, I'll break down exactly how I started from scratch, what I learned, and how you can make your first $1,000 in the stock market too, with no experience, no jargon, and no hype. When I started small, like really small. I didn't wait to save thousands. I started with 50. Why? Because the goal wasn't to get rich fast, it was to learn by doing. I opened a brokerage account. I used Fidelity, but you can also use Robinhood, Webull, or M1 Finance. Most of them offer fractional shares now, meaning you can invest $5 into Apple or Tesla without buying a full share. Lesson 1, don't wait, start tiny. The habit is more powerful than the amount. 2, I focused on index funds. Everyone was talking about picking hot stocks, but I went with index funds. Specifically, I chose VTI, Total U.S. Stock Market, and VOO, S&P 500. These funds track hundreds of companies at once. Less risk, better sleep. Warren Buffett recommends this strategy, and if it's good enough for him, it's good enough for me. 2, don't chase trends. Build the foundation with boring but powerful index funds. 3, I set up automatic investments. I automated a weekly deposit of $25 even when money was tight. Why? It removed emotion. It built consistency. It turned investing into a habit. And when the market dipped, I bought more for less. That's called dollar cost averaging, and it's one of the best strategies for beginners. 3, set it and forget it. Automation beats motivation every time. 4, I watched my emotions more than the market. When my account dropped 20, I panicked. When it went up $40, I felt like a genius. And that roller coaster? That's where most beginners lose money. So I made a rule, no checking my portfolio more than once a week. Instead, I read books like The Little Book of Common Sense Investing by John Bogle, The Psychology of Money by Morgan Housel. 4, you're not just investing money, you're investing mindset. I avoided these common beginner mistakes. Here's what I didn't do. I didn't YOLO into meme stocks. I didn't follow TikTok gurus promising 10x returns. I didn't invest in what I didn't understand. I stuck with companies I used every day like Apple, Microsoft, Google, and I diversified using ETFs. If it sounds too good to be true, it probably is. Simplicity scales. 6, I reinforced my growth with education. Every week I gave myself one goal. Learn one new thing. How dividends work, what a PE ratio is, how to read a basic chart. Not to day trade, but to understand the game I was playing. I didn't want to gamble. I wanted to grow long-term wealth. 6, you don't need to be an expert. Just curious enough to keep learning. 7, I made my first 1,000er slowly but surely. It took 14 months of small deposits, index fund investing, reinvesting dividends, letting compound growth do its thing. And one day, I checked my account, and it passed $1,000. I didn't get lucky, I just stayed consistent. 7, the stock market rewards patience, not perfection. Tools I used along the way. Brokerages, Fidelity, M1 Finance, Robinhood, for beginners. Tracking, Personal Capital, to track net worth. Learning, YouTube channels like The Plain Bagel, Mark Tilbury. Reading, Reddit's R.R. Boglehead's Underrated Gem. These resources helped me build confidence, slowly and steadily. If you're a total beginner, here's the truth. You don't need to time the market. You don't need a finance degree. You don't need 10,000. You just need to start. Be consistent, stay in the game. Because the best time to invest was 10 years ago. The second best time, this weekend. If this gave you the confidence to start your investing journey, drop a emoji in the comments. Like, share, and subscribe for more. Your first $1,000 is just the beginning.